Welcome everybody to our panel discussion today. The topic is crypto exchanges, status quo, challenges, and next steps. We have Professor Philipp Sandner as the moderator, Simon Seiter from Deutsche Börse Group, Andy Flury from AlgoTrader, Maximilian Marenbach from Kraken, and Maximilian von Wallenberg Pachaly from digital exchange Börse Stuttgart, discussing this, this topic. Basically, Philipp will introduce all the speakers in more detail. So for me, the logistics part is what I'm going to talk about right now. Those of you who've been to one of our events before, we're not using the Zoom chat because of the Zoom bombing problematic. So you see it's locked. But if you have any questions that you want to ask, any feedback like something isn't working, but especially any questions you want to ask to the panelists, join this link or this WhatsApp group if you're not in there yet by scanning the QR code now, or by going into your email, and the email that you just received with the Zoom link in it, it also has the WhatsApp link. Just click on it and then you can post your questions there and Philipp will pick them up and ask them in the discussion. Yeah, that's it from my side. I hope the link works for everybody. Also check your emails if you can't scan the QR code, and I'll hand over to Philipp now to get this started.
I have the pleasure to moderate this panel. It's quite some good people here, which we all know, good companies here, Deutsche Börse, represented by Simon Seiter, then Börse Stuttgart Digital Exchange / Börse Stuttgart by Maximilian, probably sitting in Stuttgart somewhere. Then we have Andy Flury sitting in Switzerland. He is working at AlgoTrader, which is an order routing middleware infrastructure system, in case I get this right. And then we have one of these very modern crypto exchanges in the room. That's again another second Maximilian from Kraken. Yeah, fascinating to have this panel, and we will discuss crypto exchanges. Especially we will focus also about the topic, where is the current volume in crypto trading happening and where will it go to? For example, will it remain mainly with centralized crypto exchanges? Will it, for example, move towards decentralized exchanges, or will it, for example, move to those traditional exchanges, which then are very soon digitally transforming themselves, for example, Deutsche Börse or Börse Stuttgart? Let's discuss all these questions. We will also discuss OTC trading and so on. But before we get started, I would quickly ask everybody to present himself, and yeah, I would have loved to say herself, but we again need more women in this space. That's just not easy. So therefore, everybody in the room, please quickly present himself. Maybe Simon, you would like to start presenting yourself, also presenting your basic position about what you know and what you think is going to be happening in the cryptocurrency, crypto exchange space right now and in the future, in a very short statement.
Okay, hardest question first. So Simon from Deutsche Börse. I joined Deutsche Börse October last year as head of digital assets. Before I worked at Commerce Bank in the DLT lab. I think that we see already liquidity in crypto assets as being like the only liquid true digital asset that we see right now. Yeah, and that has to be respected, and I think that this will still grow, while we have not yet, of course, unleashed the potential that we assume. And so the question for us will be, how can we provide infrastructure that we start to build right now that will cater the needs both for these new asset types as well as for maybe existing asset types, and actually whatever type of asset there might come.
Okay, perfect. Thank you very much. So who's next? Maybe Max from Börse Stuttgart BSDX.
Sure, Max von Wallenberg from BSDEX, Börse Stuttgart Digital Exchange. So Börse Stuttgart Digital Exchange is sort of the first fully made in Germany, or made the German-made fully licensed crypto trading venue. We seek to become, not just a trading venue, but also a full ecosystem around tokenization of assets in the crypto space. And our vision, or sort of also to your question, Philipp, is that we're like the world of crypto trading or tokenized asset trading is literally just getting started. in the sense that like institutional grade infrastructure is now really on the cusp of hitting mass market. I think like the last couple of years, we've seen really like the, you know, what's still a very first mover type of market, but really now like the you know, the big guys like big banks, asset managers, etc., are starting to enter the market, and only now like infrastructure is really there in regulated countries and regulated trading venues like Börse Stuttgart, that we feel is now becoming a, you know, a significant asset class that everyone should have in their portfolio. So yeah, good times ahead.
Nice statement. Thank you very much. So then Andy, please present yourself and your company quickly.
Yes, thank you. My name is Andy Flury. I'm a founder and CEO at AlgoTrader. I have a trading background. I used to work for a hedge fund in Switzerland for quite a few years. In 2014, we started AlgoTrader, and we're basically helping trading firms to automate their trading strategies. Originally, we supported equities, FX, and derivatives. And since 2017, we also added support for crypto. So we were one of the first platforms to trade cryptos on exchanges, on market makers, on brokers in a fully automated fashion. And now that it seems, you know, cryptos is becoming mainstream, we decided to launch another product earlier this year called Wireswarm, which is a digital asset trading and execution platform specifically for banks. For example, Signum Bank in Switzerland is using that platform. And it basically provides a single API connection to gain access to multiple liquidity venues, and it has all the, you know, functionality that we know from traditional finance, like execution algos and smart order routing, to achieve best price executions for institutional clients.
Perfect. Thank you very much. And then Max from Kraken, please also present yourself quickly.
Thanks, Philipp. My name is Maximilian Marenbach. I'm the head of banking and payments EMEA for Kraken. Kraken is one of the world's oldest and largest old school crypto exchanges. I didn't want to say traditional.
It's a legacy crypto exchange, so to say.
So we have one of the biggest exchanges in the world, operations all across the globe. And right now we offer, you know, we spot exchange, we offer a futures exchange, we have our OTC desk, as well as our other products like CryptoWatch, for instance, that is used by a decent number of traders worldwide as well. And yeah, basically I have to go almost fully d'accord with what my name colleague Max basically said a few minutes ago, that we are in this early adopter stage, right? We are maybe, let it be 1% done. I mean, 1% is maybe even a lot already thinking about it, right? And I think this is why all of us are also excited to be in this industry, right? Because it's still so much to do, so much like challenges ahead, and no one really knows 100% sure where, you know, the road will take us, for sure.
Perfect. Yes, thank you very much. So let's quickly discuss the market as it works right now. So some of you guys already said that we are going mainstream. What does it exactly mean? Are we talking about 5,000 crypto assets? Are we talking about Bitcoin and Ethereum? Or do we talk about security tokens, which should have already created some kind of hype last year, which didn't happen actually? So therefore, if you're talking about mainstream or going mainstream, what does it exactly mean? Because yes, we see some volume there, but apparently the Bitcoin price has become some kind of stable coin in the last two months or 6 weeks, I guess. So volume is going down and so on. So some people could also argue exactly the opposite, that this market is basically slowly decreasing. So therefore, if you say we are going mainstream, what does it exactly mean? And what kind of assets do you have in mind if you're saying this? Who would like to take this question?
Happy to start. Since I started with mainstream, I'm happy to take this. So for me, looking at the market, like mainstream means if the general populace is happy to hold Bitcoin. I think that's a very simple way of putting it. And if you just look around, everyone, it's a mainstream asset in the sense that it's a brand. Everyone knows Bitcoin, right? Like, if you look at like average newspaper readers, the non-crypto folks out there, they know this asset. And in my opinion, once we get to the point where people say, it makes sense from a Sharpe ratio perspective to have 1 to 2% of your portfolio in crypto, that's insane volume that will come to this market. It sounds tiny, 1 to 2%, but that's like, an order of many 100 times multiples what we're currently seeing active in this market. I think trading is already pretty, liquid and mainstream when it comes to like, the trading venues and the exchanges. However, crypto as an asset class is actually just getting started. And in my opinion, like there will be a lot more buzz around, portfolio theory showing that it makes sense to, not just hold commodities, gold, fixed income and equities, but also hold digital asset as part of your diversified portfolio. And once we hit that will be sort of the next rocket phase for our industry here.
Anybody else wants to add something on this question? How is this market currently working? What assets, what volume, decreasing, increasing, and so on?
Yeah, sure. Maybe I can add a few points here, Philipp. So I think what it means that crypto is becoming mainstream is that originally this was a retail market, and now it's really becoming an institutional play. A few weeks ago, Fidelity published a report that says that now 36% of institutional investors hold digital assets in their portfolio. Probably a small allocation, but 36%, that's a huge number. And in addition to that, we now see banks. In Switzerland, where we sit, there are quite a few banks already, like Signum and Seba and Dincor, that offer crypto custody and crypto trading to their clients. So for me, that's another indication. And the third one is we work with a lot of existing hedge funds. 1 or 2 years ago, when we asked them, would you like to also invest in cryptos? They said, no, this is nothing for us. We'll stay away. But now, especially in the last few months, we've actually been approached by traditional hedge funds who so far always said no, and now they're like investigating, the different options for them to have a small allocation into this new asset class.
Okay, well, sounds promising. I also know all this, and I also hope that it's actually true. But if you talk to people, then you hear these points and you get these kind of signals. But if you really ask, like the average asset manager, the average family office, the average bank, the average whatever, then they are so extremely far away from investing in crypto assets. They are becoming interested. That's my feeling. But the decision to invest is, I would say, with 99% of all financial institutions and also asset managers still at least 1 year away. That's my feeling. Why are you saying the opposite? Probably because you are in the market. You are exactly approached by those companies who are at the forefront of this. But if you feel that 36% of asset managers are already holding crypto, then, to be honest, the market cap of Bitcoin would have been much higher. Take Apple, for example. Apple has a market cap of 1.6 trillion. That's 10 times larger than Bitcoin, just one company. Amazon, another 1.5 trillion. That's another 10 times Bitcoin. So therefore, to be honest, I think we just see some early experiments. We see some early hedge funds. We see some early family offices. And all this needs to start. But maybe I'm wrong. What about OTC trading? What about other institutionals in this market? Where are we right now? And where do these different impressions are coming from?
I can maybe take this.
Yes.
So we see actually a lot of clients from the market making side that are going into this asset class simply because their job is market making. And there's a lot of markets to make in crypto right now still. Yeah. And so they're taking simply the opportunity, which is their job and which is good and which is fair. However, on the other side, I think it also shows to some extent that we have not reached the level of maturity in these markets as we have in other markets maybe. Yeah. Because they profit from inefficiencies after all. Yeah. which is totally fair. So they are closing a gap in the market. They are using the inefficiencies that might still be there, but it also shows us there is still inefficiency and there is a gap that we can close. Yeah. And I fully agree what has been said. I think in terms of adoption or getting it mainstream, it's at most about access and flows. Yeah. And access for the ordinary guy on the street is possible today, but still not as easy as he can buy a share. And I don't mean in terms of that the solutions out there. So for example, everybody can register with Bison. It's a great app. Yeah, I can with no regret say, yeah, I say that. Yeah, every private user I can recommend, go there, buy a Bitcoin there. Same for Kraken, for example. I'm fine to say that. The point is, the ordinary guy doesn't download a separate app and register a separate bank account only to buy one asset class. That's not the ordinary investor. The ordinary investor has his bank and a bank account and a depository account, and he wants to order via his custody app, his depot app, yeah, his assets. And so the assets have to come in this infrastructure. That's what we are looking into. That's why we are more trying to figure out how we can leverage existing infrastructure, which takes more time, but where we hope we have a higher leverage on the long term. And we started this via introducing ETNs that are now listed on Xetra. So this technically enables already clients with the ordinary banking app, with the ordinary custody account, to somehow invest into Bitcoin. Am I satisfied that we are still doing this via cash-settled way with an issuer that is separate and not with us? Not yet, but it's a first step. Yeah? And so I think this access argument is for me very important to bring it mainstream.
Good point. Who would like to add?
Yeah, I can maybe add one or two things to that. I mean, Simon summarized it perfectly. I mean, the normal person, right, they're not necessarily download one or two different apps just for one asset class. That would be most likely overkill for it, right, for a normal user. I mean, we've seen that the early adopters in crypto were really in it because they believed in the technology or because they believed they can make a ton of money with it. They believed in just it being a new plaything for their trading. So there are different types of users. We're talking about mainstream, right? I mean, to make a step back, what we see, it is good now that it's more people know about Bitcoin. They've heard about Bitcoin. They read about Bitcoin in, let's call it like day-to-day newspapers or something like this. So there is an increase of awareness of it. But the next step is getting those people access to it and getting people easy access to it. Because I mean, we all know it, we all use Uber. People tend to be quite lazy at times, so they want to have an easy access to products. And for us at Kraken, at least, that's one of the key focus areas that we do, right? That we want to give as many people as possible worldwide, some way, shape, or form, secure, safe. That's the #1 priority, but also comfortable access to this new asset class, or these new asset classes, I should say.
Yeah, sounds good. But if you are really digging one step down, my feeling is that people are here and there interested. They know a little bit about Bitcoin. They have heard something about this guy, Satoshi Nakamoto. But besides this 99.9% have no clue what exactly Bitcoin is. For some, it's a digital asset. For some, it's, I don't know, some tulip thing. For some, it's some wonder why scarcity cannot be touched, why it's basically invisible. So therefore, many people are interested. But my feeling is that people are still extremely far away from really taking a bunch of money and investing it and really wanting to buy Bitcoin, right? Because if they want, then they can easily onboard with Bison. You know, I did this myself, takes 5 minutes on a Sunday morning. That's fascinating done, really good. But I feel that still people are extremely skeptical. It's not bad because that's exactly where the upside is, right? In case all these people are investing, then of course the price goes up. But to be honest, sometimes I'm a little bit disappointed, you know, that it doesn't go faster because you all are building so brilliant infrastructure. So therefore, the next question would be, what exactly are you doing? You know, you're building trading places, that's Kraken. You're listing ETN products, that's Deutsche Börse. You are enabling institutionals and retail clients with Bison and BSDX, and you're building order infrastructure like a middleware for other exchanges, right? So can you quickly present what exactly are you doing and why you think that this makes sense. Does it make sense for a crypto exchange, for a traditional exchange, for a middleware? Why are you doing what you're doing? Where do you see this market going? Some of this has already been answered previously, but maybe you want to add something on what you're exactly building. And for this, let's also answer the following question. Are you building on-ramps for the system or off-ramps for the system? Both would be possible. Maybe who would like to start this question?
I'm happy to take this one, Philip, if you don't mind. Why are we building a crypto EMS at AlgoTrader? We believe that a few years from now, every type of asset will be tokenized. Be it company shares, be it real estate, or even art. So everything will be tokenized, and this will disrupt how the entire financial industry operates today, and it requires a new generation of financial technology components. We believe it's the bankable assets, but it's also all the non-bankable assets that will be, that can be traded in the future. We also believe it's not just going to be through banks. I think you said it, in one of your last panels, Philip, that you'll be able to trade assets, basically anywhere on your smartphone through social media, and this is just getting started. I think the total amount of assets we have today is something like 300 trillion. All of this will eventually end up on the blockchain, on DLT technology, and we're building the infrastructure for that new era that is about to emerge.
Okay, so you're giving this a twist and saying it's not just about Bitcoin and Ethereum. That might be the case right now, but you are building infrastructure for, say, +3, +5 years. Anybody else want to add something here?
Yep. So fully aligned with that one. I think tokenization of assets super interesting. However, it's quite a few years away before this hits trading volumes that are, I would say, interesting for a really liquid market. But it's very important to start now to bring digital assets, to bring like classic assets on the blockchain. One other thing I wanted to add is what we're bringing as Börse Stuttgart to the market is like a traditional, I would say, a traditional player in the financial markets that people know, a brand people know, and put its full weight behind this initiative and behind the trend towards digital assets and crypto trading specifically. And I think that's precisely why it hasn't gone that mainstream yet, because people, we all know Kraken, we all know Bitstamp, we know Coinbase, we know the exchanges, we know the brand name once. But if you ask people on the street, they don't, right? And they need some name recognition, they need some trusted brands to be able to. People are very careful where to put their money, and naturally, the crypto space has been associated with scams, with general distrust. Looking at the Twitter hack we had yesterday, there's a lot of uncertainty still in the market, and by big name financial institutions like the Frankfurt Stock Exchange, Börse, Stuttgart, speaking for Germany here, entering this market, this is sort of a sign of trust that this is here to stay.
Maybe to add a bit on the infrastructure component, and I'm coming back to the argument of the access, and I think it was even already picked up to some extent in the WhatsApp group. The point is ultimately that I think personally it doesn't make sense to build a completely separate parallel infrastructure, and thereby also referring to your question of on-ramping or off-ramping, Philip. Yeah? The assets have to be integrated into the existing infrastructure, because simply we won't build separate distribution channels because the client doesn't ultimately want it. Neither institutional clients nor retail clients. If we build only separate infrastructure, this will be a niche topic forever. Yeah? Institutional clients don't want to build completely separate infrastructure because it will cost them millions, to build completely separate streams. And they also want to stick with their existing distribution channels to their respective clients. So for us, we are completely not in the retail business, we are in the institutional business only. We want to make it as easy as possible for our clients to get these asset classes to their clients. It's very simple. Yeah? And we can get this only if we integrate it into the existing infrastructure. And how do we do that? At first step, via maybe steps that don't seem so pushy, yeah, completely get that point, as the ETNs that we listed. But the ETN can be bought by anybody who has a depository account. And this is a whole new extent of market that has been opened up. Yeah. And if we can get this even more closer to the chain itself, so of course going into the direction of physical settlement, then this really becomes accessible for the people via ramping it on the existing infrastructure. And indeed, there are multiple benefits that the technology provides. But for example, and I think Andy mentioned it before, we already have things like smart routing. Yeah, that's something that we don't need to rebuild in general if we already have it as a Deutsche Börse, for example, for other markets. Or we don't need to build another matching engine because we already have quite efficient matching in secondary markets. The question is, how can we connect it? How can we integrate it in the infrastructure? This is where we're working on, but if you put it on that scale, then you have to take into account all secondary order consequences that we would have if we put it on the infrastructure, because we put our trust on it. Because then the clients, the institutional clients, trust us that we operate it in a safe and compliant manner. And the clients of our clients trust them that they have an infrastructure they can rely on. So that is the degree of integrity and protect that we have to build. And that is why it's also taking some time.
Yeah, your point makes absolutely sense. But you, Simon, you are coming from a very legacy position, you know, like number one in the German market, all trading centralized. I don't know how much in Germany, 90-something% probably. But the crypto trading is happening elsewhere. So the question is now concerning crypto assets, where does this trading will move to, you know, will it come back to you as Deutsche Börse? I would guess that the percentage of Bitcoin trading at Deutsche Börse is 0.
Well, after the ETN, it's more, but it's small. Let's put it like that. I can give you numbers afterwards. Yeah.
Then maybe Kraken is, I don't know, worldwide, around 10% maybe. I don't know the numbers, right? Börse Stuttgart might be a couple of percent. So where is crypto assets trading volume going to? Will it go to traditional exchanges digitally transforming themselves? That's Simon. Will it go to you, Simon, the volume? Or will it stay with centralized crypto exchanges, or will it at some point of time go to decentralized exchanges, which are very, very, very slowly popping up here and there? So what's your expectation here?
I can take it maybe first.
Please.
So I think, I don't know 100% sure. If I would know things 100% sure, I wouldn't be sitting here with just gambling away money and sitting somewhere on the beach all day, right? If I would have that kind of knowledge. But the way I see it, it's going to be a market where you have multiple different players in it. You're going to have players of different sizes, different color, different backgrounds. You're going to be traditional players that are going to branch into this new market. And you're going to have new players such as us. And even though we are an old crypto exchange, I still consider us to be a relatively new player, to be who's going to be entering, you know, more sophisticated or even bigger stage by offering different products, by growing, getting additional companies in, etc., etc. Overall, what you have to, and I think some of my fellow panelists mentioned it already a little bit, it's over the last few years, crypto industry as a whole has not always done the best job when it comes to creating a good reputation. We all know about all these horrendous scams that happened left and right, about all these ICO scams that happened a few years ago and now luckily almost all died out. So that was really good in hindsight for the industry, right? We are a young industry. We are still at the growing stages. And, you know, in every new industry, you have some growing pains, which means you have to kill out all the bad blood and all the bad competitors in the market, which is luckily something that is happening right now and has happened over the last year or two. It's all about trust, right? Especially in a market, in an industry that has had some bad news out there because of all the scams and hacks that happened. So it's all about trust. So for us at Kraken, you know, it's very important to generate trust at the users level, be it retail or be it, of course, corporate clients, to make sure that they understand that this centralized exchange is a safe way to trade, a safe way to execute, a safe way to be there, and to know more about it. So what part of our job is not only being the exchange, but also being some sort of an educator, because how are people supposed to know anything about this new asset classes, right? So, and we regard us as one of the better brands in the industry, and it's part of our job, at least in our mission statement, to make sure that we also educate people as much as we can to help them explain how things work. That's why we hold a couple of seminars and everything, try to explain everything on our website. We have a decent customer, or very great customer service from my perspective, that everyone can ask. And it's all about creating this trust in this new asset class. And then once we have created that, then we can take the next step and see, okay, how can we really explode and expand.
Any other person wants to add something to this question? The question was, once again, where is the trading going to in the future? Because now it's mostly sitting with centralized crypto exchanges.
My opinion, well, Andy, you wanted to?
Yes, happy to add to that. Yeah, right now it's definitely centralized exchanges. I'm happy to see that big national exchanges are also launching products. First one was CBOE, CME in Chicago. We have a few exchanges in Europe. Right now, it seems that they're struggling to get volume, that the CBOE even abandoned their Bitcoin futures in 2019. I think that the volume on crypto, so Bitcoin and Ether, will remain with the centralized exchanges for quite some time. I think the traditional legacy exchanges, they will become very important for tokenized assets, because there, you really need that legal regulatory background to trade those. So I don't see those, happening on platforms like T0, for example. Maybe we'll also see some acquisitions, that national exchanges acquire crypto exchanges to get the client base and to get access to the technology.
Yeah, I also think I second that. I think we'll see even more focus on centralized exchanges, also for reasons of user interface, right? I mean, the general person has no idea how to, use a decentralized exchange. That's one thing. Second is brand as well. I mean, it's very, it obviously costs money to, build a brand, to acquire users, to build trust. If you look at how much traditional players in the financial industry are spending to build reputable brands, it's significant, and that will take a long time on the decentralized side, because there's not really anyone that has an interest to build a centralized brand in the decentralized space. I hope that makes sense. So in my opinion, also on the institutional side, decentralized exchanges will not have the capabilities to do order matching on a scale that a centralized exchange can do. It's much more complex than what people think to build a fast and efficient order matching engine, and to do that on the decentralized exchange is, in terms of the mainstream volumes that we all expect, virtually impossible. Happy to be proven wrong here, but in my opinion, this is a technological challenge that is not solved yet.
Okay, quite some volume is still going via OTC trading, like people directly doing contracts and exchanging values. Why is this? Because if we have efficient trading infrastructures, then OTC volume should go down, or is this a wrong assumption? So, Simon, could you take this question? Maybe you
yeah,
also.
Sure. So I think we had this also to some extent already. I think market makers are a valuable part of the value chain, because they try to live out of inefficiencies. To be just very blunt, and this is not negatively meant at all. Yeah. So they are going into this gap. However, we see that they have a big opportunity in the crypto market, and it's either like the existing market makers that we already know, and then there are some who, through very smart algorithms, have even exploited very, very short term, and also due to the short settlement time, opportunities in pricing differences, for example, yeah, and made really good business out of it. And I'm really envious how they made much money very quickly. Congrats to that. but it shows that this is simply due to market inefficiency, and also, to be honest, due to the maybe exactly as Maximilian has pointed it out, maybe to this kind of distributed approach, there are some mechanisms that don't work as in existing markets, and at first it's pricing. Because there is no Bitcoin price, right? There's always like some bid and offer that is taking place on different marketplaces. And if I sell you OTC, or if you sell me, Philipp, OTC Bitcoin for $1, for whatever reason, just because it's fun for you, then this is the price of the Bitcoin, right? In this transaction. So this is something that with maturity of markets, pricing gets tighter, so to say. Inefficiencies decrease, and thereby also opportunities for market makers decrease. And this is a part of the development of the market. But for me, it's simply an indicator that the market is not yet as mature as we would like it. And this ultimately means that there are some people out there that simply buy Bitcoin at a too high price, and some that sell it by a too low price. That's simply like the effect. So ultimately, it's I would say, even though it sounds ideologically great, negative for the normal people, because they can rely on a safe and stable price, and this is an issue for investors. And one aspect why they still might fear to invest into Bitcoin, because they simply may not even trust the pricing yet.
Okay.
I think there is two important points to add why we need market makers and brokers in addition to exchanges. The big problem with these centralized exchanges, including Kraken and Bitstamp and all of those, is that they require pre-funding of their exchange account. So if you're a big institutional investors and you want to trade one of those exchanges, you typically have to deposit your assets on the exchanges first before you trade. And because the crypto liquidity is so fragmented, you typically cannot just trade with one exchange. You need to trade multiple, because as Simon said, prices fluctuate. So you need to have your assets on multiple venues. And if you have to pre-fund all of them, that's a big problem. And this is what market makers do, and brokers. They support post-trade settlement. So you can trade during the day up to a certain trading limit, and then initiate a post-trade settlement, in the evening, via the delivery versus payment mechanism. And in addition, the brokers and market makers, they also support big block trades. If you want to buy Bitcoin worth 50 million today, you can't just place that big order on an exchange. You have to chop it up, use execution algos and smart order router, and have that order work, over multiple hours, which means you don't actually know the final price you're paying for that order. And a broker and a market maker will do that for you. You can ask that broker, if I want to buy $50 million worth of Bitcoin, what's the price? And they confirm a price, and beforehand what you're paying. I think these are two very important reasons why we need brokers and market makers.
Okay, great. So Jan, can you set up this question for the entire audience? We prepared this question, which perfectly fits this topic. Yeah, let's see what the audience is saying, where the volume goes by 2022. That should be in plus 1.5 years, plus 2 years. It's interesting to see that people are not yet believing in these decentralized exchanges because probably the volume they can handle is just too slow. But in 2 years, a lot can happen, as we already know from the crypto world. So we have 55% having voted. That's approximately 80, 90, 100 people. So we have a clear image. So people are thinking that the trading volume mainly goes towards modern crypto exchanges, but also to legacy exchanges, which are digitally transforming themselves these days. So that's interesting to see basically this market not consolidating, but more or less opening up. But we should not forget that the market size doesn't remain stable. The market size should increase. So therefore, it's not that competition is getting more fierce, probably because the market should grow, as we have discussed already in the last minutes. Yeah, you can see the results here. I think they should pop up at your software right now. Okay, let's. I soon come to a couple of questions from the chat, but before this, I have one last question which I would like to pose, and this is: we are all probably believing that crypto assets are growing, coming to us, that the market is thriving, and so on. But where do you see major risks that this will not happen? What are the key risks out there such that this market will be destroyed, such that the entire architecture and infrastructure we are building will not happen, will not be further developed, such that Bitcoin is going down the drain, and so on? Do you see any major risks out there such that what we are all believing is not happening? So silence. So who wants to take this question? Everybody has an opinion there. What are major risks? You know, it can be regulatory risk, can be people or governance.
Yeah, I'll start with this one. I think the biggest risk, in my opinion, are massive short-term price swings in you know, core asset like Bitcoin. You know, if we see multiple days of like 30% drops in 5 minutes, you know, in 10 minutes, like this will be something that will make people very wary of, you know, putting not a significant amount of their net worth, but, you know, even 1 to 2% or a bit more into this asset class. Because volatility, you know, people have a hard time, you know, stomaching this type of volatility. So in my opinion, this, you know, the more stability we see in the asset class, the better. I think that's when it comes to Bitcoin. I think when it comes to other assets, I think like legal and regulatory risks are there, but, you know, we see already that the regulators, you know, the German regulators specifically, are open to innovation here. So in my opinion, there's, you know, we're on good track, you know, that this risk will be mitigated. But of course, like, you know, in case we cannot make this available to the general mass audience at scale, as Simon mentioned before, you know, it will be tricky to reach substantial scale. Okay. Who else has an opinion on this? What can break down this entire market in the next weeks or months? Any major risk?
Philipp, I don't think you know, that the market will break down at all. What might happen is that things get delayed, and I think regulation is definitely a risk. Regulators are moving slowly. I also see a bit of a risk that each jurisdiction takes its own approach to regulating tokenized assets, which will make it difficult to come up with standards. In the end, we need standards to be interoperable, and you know, technology will always follow. I think I don't see any issues on the technology side, but following the different regulations in the different jurisdictions, that might just take much more time than we expect.
Clear statement. Okay, let's talk about the crypto attack, Bitcoin attack, as it has been framed by the media. It was not really a Bitcoin attack, it was a Twitter attack, right? Simon, can you quickly explain what happened in the last 48 hours?
So I'm going to try to explain, yeah, at least I think it can be said that it was not an attack on Bitcoin, but an attack on a centralized system of Twitter, where the accounts were hacked. And this is maybe also to some extent due to the centralized nature of account keeping at one trusted party, to be honest. Yeah. So I think definitely this was a Twitter hack. That's fair to say, at least at this stage. And what has happened is that accounts of famous people were hacked, and they posted basically, the hackers posted basically a reference to a Bitcoin address as a scam, where they said like, look, I'm Bill Gates, and if you send me $1,000 via Bitcoin, I'm going to double it and resend it to you. So they managed to get, I think, around 120,000 US dollar in Bitcoin, which is actually then not too much. Some hope for humanity left, that there were not so many people, not more than 120 globally that tapped into that scam. Yeah, I think it still shows some issues that we have, even though it's maybe only 120 people or how much ever. And the thing is, it's not about that the technology that has been used here very specifically, Bitcoin is wrong or bad, but it's simply that people are not used to it. Yeah, and maybe that's part of the educational part, but also where we have to protect people in terms of investor protection. Yeah, and this is very difficult in a decentralized approach, because people right now, if they see something like an address or still deal with Bitcoin in a similar way as with a bank account, they might believe, okay, I did this booking, I can correct it later stage. So the finality of transactions in a distributed system is something that is very hard to grasp, even if you are already using it. Yeah, and so there is no per se in the technology protective mechanisms for investor protection. And that is why I think that we have to build it on top. It cannot be the answer that we say, we leave it like that, there is no investor protection, just don't be a fool. And this hasn't worked for the security markets either. Yeah, there was a time where maybe you could get fooled a lot in the security markets, yeah, to be honest. And then for that reason, it was a good thing to put up regulation. And that's why I think that it is a good example to show that the technology is not wrong. It's also not a trust issue on the technology side, because the Bitcoin transactions went through smoothly. But the point is, we need additional investor protection. Yeah.
Okay, who wants to add something on this Twitter attack, and especially like the environment around it, which is rooted in centralized systems, and account holding of passwords and so on, who are allowing such frauds? Was it good for Bitcoin? Was it bad for Bitcoin? The media are clearly negatively associating Bitcoin with it, but still, any PR is good PR. So it was basically huge PR, millions of impressions. Max, well, do you have an opinion of this?
Me, Max, or the other Max?
Doesn't matter. I asked Max to have the higher likelihood of getting a response.
I can take it a little bit. So, I mean, was it good or bad for Bitcoin? I mean, it was certainly not great for Bitcoin or for crypto in general. Was it really bad, terrible? I mean, yeah, maybe it adds a little bit on top of this reputation of crypto being used by scammers, by hackers, etc. Because, I mean, obviously it did, right? So what it shows is that even the technological giant like Twitter, you can probably argue, is the #1 media outlet in the world these days, has flaws on the security side, right? So I think if something good can come out of it, that is then that people should be aware of things have their weaknesses, and that size doesn't matter necessarily. Even big players can fall, giants can tumble, right? And I think this is something that people need to be aware of, and stop blindly following trends, stop blindly following big names, and do their own research, do their own analysis on things in order to make sure that, now Twitter got hacked, okay, but that doesn't mean that a big financial institution can get hacked as well, right? Especially if, I don't know what if it's true, but if they really use some sort of social engineering to get in, this is something that, a lot of big players are potentially vulnerable to. And I think something that can be taken out of this as a good is that, be aware of everyone has their weakness. Don't put your eggs in one basket. Don't trust just brand names or big names. Do your own research. Be smart about it, especially when it comes to your money, right? So we can take this as a good for it. But of course, I mean, given the fact that he wants to have the ransom or the investment in Bitcoin again, is probably not the best advertisement per se, but okay, by now.
Makes very much sense. There was a couple of questions popping up in the direction of how can institutional investors be attracted? You know, is it basically the quality of the asset? Is it at this point of time regulatory concerns? Is it IT security concerns? Or is it a mixture among all these factors? Or maybe it's just about lacking education and we just need to enforce education or wait education to happen such that people are more knowledgeable about all this ecosystem to be able to judge whether it's secure or not, whether there are regulatory concerns or not. So how to attract more institutional investors to have a more solid, more growing secondary market?
I can try to take this one. The easiest way, I think, is to lower the barrier. Yeah. Again, because if they have to implement like a lot of stuff, then the business case to pay this off, and we know that ultimately in a large corporation, you have to present how you earn money with it. Yeah. It will not pay off in 3 years. And if a business case in a large corporation doesn't pay off in 3 years, it's only going to be built if you have somebody who really believes in the stuff at the top level. Yeah. So if you lower the barrier, and this is where I see our responsibility as well as Deutsche Börse, to be honest, and build.
Oh, we have lost.
Yep, I'm just gonna continue here.
Something.
Is he back?
Sorry, I got a call. Sorry, guys. I canceled it now. So I was at the point we have the responsibility to build infrastructure, because this infrastructure is scalable, and then we can enable our clients to do that. That's our ultimate goal. Yeah, we don't want to go into the retail space. We want to provide solutions for the retail clients.
Yeah, I completely agree with Simon here. I think one thing that's also important is trust. Probably even the most important one here, right? Trust in, you know, that, I mean, to get an institution to like link up to your trading venue, to your exchange, to your organization is tough in the first place, and requires trust that, like, you know, the organization is here to stay, that you have, you know, you're fully in compliance with regulatory requirements, and that's much harder than, you know, than what most people might think. So especially in Germany, like the regulatory standards are so high that it's crucial here that we're building trading venues that really, you know, are in compliance here. And in my opinion, you know, we're at Börse Stuttgart Digital Exchange are precisely going towards that direction, to become this trusted partner for institutions. And yeah, I think these are the critical steps towards adoption here.
Okay, perfect. There was one question in the chat, or one hypothesis that's basically a question saying that the only remaining risk for crypto assets, digital assets to grow is probably regulatory risks, and this probably also includes crackdowns by governments on crypto assets. Would you agree with this, that basically risks and actions coming from regulatory bodies or governments are mainly the only remaining large-scale risks for this market?
I think so. As in my previous point before, I think regulatory risk is the biggest risk, but it's mostly about delaying things. We have seen bans on crypto assets, ICOs, things like that, including China. I think right now we have sort of reached a level where most jurisdictions see the point in crypto assets. So even if we might see bans, I don't think it's going to be on a larger scale. Especially on the crypto side. For tokenized assets, there we will definitely see some delays until most bigger jurisdictions have come up with a plan for that.
Okay. Anybody else? Because otherwise I would have a last question for today, and this would be the following. We talked about it previously. Where do you see new players coming up? Is it basically brokers now entering the market? Andy, you presented something very interesting, that we see crypto brokerage companies emerging. For example, Coinbase teaming up with Tagomi, Gemini teaming up with BitGo. So what kind of business models, what kind of business ideas are popping up now and in the future? Andy, maybe you take this question first.
Yes, sure, absolutely. So yes, this is basically about crypto prime brokerage, and that didn't exist until that week where Coinbase acquired Tagomi, and Gemini and BitGo both launched prime brokerages. All happened in the same week. Now, maybe to explain quickly for the audience, what is prime brokerage? Prime brokerage are multiple services. They typically includes custody, it includes trading, it includes clearing and settlement, but it also includes borrowing and lending and financing and cap intro. So meaning that the broker, if you're a hedge fund, the broker will introduce you to investors. So it's basically a concierge service for institutional investors. And this hasn't existed until about a month or so ago. And this is a very important step for institutional investors. Typically, large hedge funds, they work with prime brokers like JP Morgan, Morgan Stanley, and they're used to those services. And this was one big thing that was missing for those institutional investors to get started.
Okay, that's interesting developments happening there, which is basically related to crypto exchanges and traditional exchanges, but which is a new form of a business model, right? Who wants to add something on these kind of new players emerging?
I don't know if it's sarcastic if I say we could be new players because we're right now not. Yeah, I mean, I think I can say at least that we are still looking into, and I think what could be a kind of new approach to some extent, and then it gets twisted funny because I completely agree, Max, you are one of the oldest, so to say, crypto exchanges or crypto marketplaces. We are not, so we might be the new players then in this space. It may take some while still, but I think that the leverage that we could have and that we currently don't use, I just be very open and honest here, yeah, is actually quite good. And I think that in a positive way, it could also generate trust in the asset itself as a total. And that's what we are trying to work for. But it's not that easy because we still see the immaturity and it's still an early days market. And we have seen that we also as a group have gone into markets. And funny enough, this was called exactly 20 years ago, the new markets, yeah, where people went into and then lost money and then lost trust. And we have to be careful about this. It really has to be bulletproof to some extent, which is currently not so easy yet. Yeah.
Okay, great. Anybody else wants to do a final statement before we close this round for today? Yeah, but we learned that Kraken is basically a legacy crypto exchange, right? And Seiter and Deutsche Börse is a modern legacy.
No, I don't want to say that. Yeah? That is exaggerated.
I didn't say crypto exchange, but a modern legacy exchange. And okay, anybody wants to make a final statement for this round for today? Okay, then I thank you, everybody. Actually, the discussion in the group was quite vivid. That was amazing. We couldn't take all questions. Therefore, I will talk to Jan to maybe do another round on this topic because it was very dynamic. Thank you to all. Max, Andy, and Simon, thank you very much. If you have women to propose who should be on the panel, then please let us know. It's not that. And
I got one for next time.
Send me or send Jan the contact.
Yeah, also in the audience, if you want to recommend someone or you want to be a speaker, just shoot us a message.
Amazing. And there with this, I would basically wish you all a nice remaining Friday and then later on a nice upcoming weekend.